Hello traders, it's Samurai Trade here. Welcome to this session, how to day trade any market, the $1,000 a day challenge. Traders, this is session 145, and in today's session we're going to be going over a number of live trades that I've just completed on the ES. So I've had 5 for 5. I have recorded it, so we'll go through the trades as I explain in detail why I took the trades. So first of all, on the ES, if you're a new trader or if you're not familiar with the ES, you can start on the micro, which is 10% of the value of the ES, so only $1.25 a tick or $5 a point. There are 4 ticks to a point. I'm trading the big contract, which is 50 a point or 12.50 a tick. Now, as always, I do need to put the disclaimer up. There is a risk in trading. Please don't trade with money you can't afford to lose. And very quickly, traders, I'll just run through a couple of things here. Short advertisement, but it'll be well worth it. First of all, you can download my ebook, The Truth About Day Trading. You'll find that in the description link below. Make sure you subscribe to my channel so you can be kept up to date with all of my latest videos, and even better still, why not become a member? I run a coaching room, I run a live trading room. I've got a member site which is probably the most comprehensive in the industry. That is, I've been day trading now for 28 years, and I've learnt a few things along the way. And for $297, you gain access to you actually have lifetime access to the members area. There's over 35 PowerPoints, there's hundreds of hours of video, there's over 15 of the world's best day trading strategies, and you're about to see some of them in action, all for $297. So traders, and just one more thing here, as well as that, I've got a bonus going where you can actually attend 8 of my live coaching sessions. That is each month, every Tuesday and Wednesday evening, 6 to 8 p.m. I run 2-hour sessions for new and experienced traders where I'm teaching you step by step how to day trade using my setups. We cover everything from money management through to the strategies themselves and psychology and a whole lot more, and there are dozens of handouts there. Now, if you're a brand new trader, you only need to master 2 setups to begin with, and I direct you where to go right from the outset. So don't worry, you don't have to go and spend hours and hours and hours going through every folder. However, for those that like to go down the rabbit hole, I've got everything here. There's dozens of live trading videos, strategy PowerPoints, the setups, free indicators, the works. All right, all for $297. You can join in the description link below, and that's the advertisement. So let's now get into this. Now, you'll see, traders, that I love to trade on both Renko charts and tick charts. Now, you can use Fibonacci hard charts, which is a combination of Renko and Fibonacci range time-based charts. It doesn't really matter. It comes down to personal preferences. However, you can apply my setups to any chart type. Now, I like to look at myself as a sparrow in a way. That's what scalping reminds me of. We get in, we get out, we get paid. And as you're about to see, I also very much support what I call POQ, the power of quitting. Getting in, getting out, getting paid, hitting a target, and that's it for the day. Now, I was going to show this slide in a few minutes, but I may as well bring this one up right now. It's a great movie, Moneyball. If you haven't seen it, if you're considering a career in day trading, or you're already a day trader or a scalper, this is a much watch video, because in the movie it talks about home runs and getting on track, just getting to base, and it's about a losing team that then becomes a top team. And the whole concept is, rather than going for a home run, just get on base. Just get on base and the figures will look after themselves. And statistically, this is the way to win. And it's the same as you're about to see with my trading. Just get on base, and I want to show you a spreadsheet which you can actually download a copy and a little video. You'll find that in the description link below. I'll show you that in a moment, but I want you to go I want to go back and just quickly review the trades, and we're going to play back the recording of these. Now I was hit pause every time I stopped trading for a couple of minutes, but this is all over and done with very quickly. Anyway, this is what was this that was all over and done with within 20 minutes. But as you're about to see, there's a trade I took some hours before, but I've been having internet problems. I had to get them repaired, so I had to go offline for a while, but I'll show you that as well. But I only recorded these ones. And so we're going to go to the charts. I'll explain these, and we'll look what's happened since then and what happened beforehand. Well, number one, these are recorded anyway, so you can see if they haven't been made up. But the market is consistently like this, and with trading you don't have to be perfect, but you do need to be consistent, and you need to be disciplined, and you need to follow the right money management rules. And I like to look at it this way. Number one, we are money managers. We're risk managers. That's the number one thing when it comes to your trading, preserving your capital. We'll talk more about that in a moment. So for members watching this, we had a 2B, we had a pivot magnet there. I had a really nice 2D. We had I wasn't on the 2D. I marked it up as 4 trades there. In fact, I've only got 4 out of 4. No, yeah, 1 2. I thought I took the 2D, but I didn't. I took this one. Okay, let me correct myself, everyone. It's 4 from 4. Okay, 4 from 4. I thought I took the 2D. I love taking divergence trades, and a 2D is a double divergence, and it's a really good setup overall. So I stand corrected. It's actually 4 from 4. And the original one I took earlier in the evening was this one here, just a standard 2-3B for members watching, and there were just some beautiful potential setups before and after. Now you'll notice that I've taken these trades during what I call the Globex session. Globex session is the market closes at 4 p.m. Central Standard Time and reopens at 5 p.m. Central Standard Time. And so I love trading after hours. One of the reasons for that is on the ES you've still got good volume, but the market's what I call tradable. It's a lot slower. Now how you do slow your charts down during, say, the New York trading hours is you trade a higher time frame. So here I'm only using a 2-tick Renko. Now let me just skip ahead for a moment. Now this is where a lot of traders, they don't want to hear this, but it's critical. Remember, this is a business. I've got thousands of members, and I've got hundreds in my live trading room and coaching sessions, and my job as your coach is to give you accurate advice, and sometimes you're not going to like that advice. So the advice here is to trade the 2-tick. You can have a smaller stop loss. I, for an example, on this market are using a 10-tick stop loss. Sometimes I'll make it smaller, sometimes even I could probably make it smaller, but I'll leave it at 10 ticks. Now the effects of that is my risk. Okay, so I'm basically risking $125 per trade, and what's 2% of 6250? $125. We never ever risk any more than 2% of our account. If you do, you're going to eventually blow your account, because you are at one stage going to have 5 losing trades in a row or more. So it's absolutely critical that from a money management, risk management point of view, you've got that under control. Now the great thing now also, and I just thought, and I should add a slide to this now, is we've got some traders kicking butt trading prop firms money. In other words, all they do is basically lease an account to trade, and they're trading someone else's capital and keeping up to 90%. And I just had Dave, one of my long-term members, actually in one of my groups speak for an hour, or actually it was about an hour, just on his journey as a successful prop trader. And his first payout, I think, was either I don't want to be it was either $30,000 or $40,000 out trading 5 micros. That was and anyway, he spoke for an hour on that. And actually, you'll find, if you become a member, by the way, you'll find the recording in the members area under prop trading. So that's another option. If you don't have the capital, you can trade a prop firm where and then you only really need to kick off with a couple of $100. Now, on the other hand, if you want to keep 100%, you can start on the micro, and this is the bottom line. Stay with me. So here, if you start off with 10% of a value, $630, and here you go for basically a 5% return on that, $32 a day, which is only 26 ticks a day. Within 12 weeks, potentially you've got 7,000. You can then roll over then and start trading the big contract. Okay, so then based upon $313 a day, within 11 weeks you've got the potential there of being upwards of around 12,000 a week income. Your capital's now 56,000. Within 13 weeks, 20,000 a week potential income trading only 13 contracts. This is a true potential, and you're about to see how to do it on my live recording. But I do want to mention this. A lot of traders, if you've blown your account a number of times already, or if you're a brand new trader, you may need to build the belief that yes, you can do it. My late grandmother, God bless her soul, used to say, slowly catch a monkey. And means sometimes we want to take it slow, develop our skill set and our confidence. Now, if you started then going for only $15 a day, which is only 3 7-tick trades a day net, which would give you after commissions, assuming $1.50 round turn, 15, within 24 weeks you've now got the capital to roll over and start trading the big contract. Now, what would probably happen is on the way through this journey, and remember, you can be holding your full-time job before you do this. That is, you can get home from work and trade before you go full-time, because we're talking about the Globex hours. And of course you can trade during the New York hours. I like the afternoon session New York, just because of I'm down under, so my hours are a bit upside down to most of our members in the US. But then you roll over and going for $150 a day, basically half of what we were looking at earlier in the screen. Within 22 weeks, potentially $5,000 a week. 28 weeks, there's your 10,000 a week, going for only 2 trades a day. Now, why 3 trades here and why only 2 7-tick trades there? Comes down to the commissions. So per trade you pay more on a micro. So typically, say with NinjaTrader, who's an excellent broker, so with them on the ES you're paying $4.28 round turn if you've got a lifetime license to their charting platform. Okay, so on the micro you're paying $1.22. So effectively for 10 micros, which is the equivalent of a big contract, you're paying $12.20 compared to $4.28, and that can actually make a big difference to your bottom line. However, what a great spot to start. Even if you've got the $6,000 to $7,000, start on a micro. Well, actually, all great trading platforms allow you to start on the simulator and build from there. Just get on base and build from there, because what you'll do then, you'll build both confidence and competence at the same time. Impatience is a killer when it comes to mastering the art of day trading. Now, when we go to the charts, or actually the recording, and if I can keep it under 30 minutes, we'll then go to the charts, the live charts, that is. Here are the key areas that I consider. And the great thing is, with all good trading platforms now, all of these plot automatically on your chart, so you can have all of these plot. And the reason these are important, we bounce between these areas. They act as support resistance areas. So let me now pull up the recording. So rather than go, let's go and look at the recording now. I might jump ahead with some of it, so just because it's, how long's it go? Oh, it's not too bad actually. It goes for 7 minutes. So I'm going to walk you through here. So just there, I'm going long. Now the reason I'm going long is based upon something that's happening on a higher time frame. Is yes, I can enter directly. This is called an entry chart, and I've got what I call an anchor chart. One very simple concept when you see how it works. Okay, and see that white line, we've got yesterday's close, the current day's open, and see this up here. This is the current day's high. We love to go up there and kiss the high of day. Now what I'm doing is increasing my target there. So generally, depending on the time of day and speed of market, I'll target 8 to 10 ticks, and you can see there I've automatically just gone to break even, but then brought my stop back down just to allow a bit of wriggle. Now you'll notice there that in a moment you'll see we'll go right up to the day's high, but there's no guarantee that's going to happen. So I set my exit target. Whoops, sorry traders. Oh, what I'm just doing there, I'm just going back. This is just, yeah, going back here to my first trade of the day, which was actually at what was that, 1853, and I had to stop there because I've been having internet problems. We got struck by lightning actually in our backyard a week ago, and we had to get it repaired. It frizzled my modem, but anyway, so I've stopped trading. But now this is back where we are a number of hours later after I'm back online. Now by not going and targeting the very high, which is the current day's high, I was what I call front running, and I'm glad I did, because as you can see we're pulling back just here. Now when we pull back like this, and I've missed that by probably a good 4 ticks, I also get very suspicious. Why? This is the high of day. With the high of day and low of day, we love to push through those levels. So there's a good chance we'll, after a retracement, we'll have another opportunity to go back up and hit that high. Now what I've probably got setting up, and for members watching this video, we've got a pivot magnet. So I'm thinking pivot magnet setup. Now a pivot magnet, traders, is, even though the current day's high or low is not technically a floor pivot, and here I'm now going long, as you can see there. However, they act and behave like pivots. Now just there, I'm tightening my stop up there from 10 ticks to 8 ticks, a little bit tighter. I'm still keeping it a little bit down below the swing point here, and then it just takes off very quickly. I've now gone to break even. Now what I'm doing here is I'm ready to get to break even, or sorry, to lock profits in as soon as I think this might retreat. Because when we do go up there and hit the high of day or the low of day, quite often you'll punch through by a few ticks each time, and then you'll quite often get a retracement. So, and this is all critical factors that I teach you in my training. Very straightforward. Once you hear it 3 or 4 times, you have what I call aha, now I get it. Now on the right there, let me just pause that. This is my anchor chart. Now I've obviously got multiple screens, so I'm looking at this on a multiple screen. I just wanted to, on another screen normally, but I just wanted to show you that I'm looking at another time frame as well, because we want to be trading in the direction of the tide. We want to go with the flow of a river, which is a higher time frame. Now just there, that was and see that there to there, now that's a beautiful double top, and that was the one I thought I was on, because normally I would have jumped on that and shorted that potential trade. Okay, so it makes a great divergence trade. Okay, so now we're just waiting for our next setup. Now for members watching, I'm expecting a T10 anytime here. Okay, in fact I now get a potential, and unfortunately I should have shorted right here, and I hesitated on this one. Now let me just point this out. I just wanted to bring this up because what I hadn't said, there's no voiceover on the video, so I thought I'd just show this while I was recording, that my target for this is 325 on the 2 tick, 325 a day per contract, which, as I've shown you, 11 weeks, potential up to 12,000 a week. And just by adjusting it, going for an extra 50 a day for an example, has a massive effect. Here on this one, you could be trading this market with 6,250. You can trade it with 3,000 if you like, but that's a high risk approach. We are risk managers. Okay, so here I only need 4 7-step scalps. Now each one of those little steps on the Renko candles are what I call steps. So you'll see I'm getting anywhere from 4 to 10 to 12 step moves. So we never get exactly 4. Sometimes I'll wrap it up in two trades, because I'm also following what I call POQ, power of quitting, getting in, getting out, getting paid. That works for me. Go back to the recording. Just wanted to point that out, because normally I'll put it on my chart before I start what my target is, but this is what my target is. So I'm just showing you down here potential income, and then week 13 what the potential income is. For the young guns, they want their 20-30 grand a week, and basically we do it with these trades. Now here we've got a number of trend following trades here. Now I'm in on this one. Now this is going to be what I call a scalp. I actually take some heat on this one as it goes against me a bit, and I got in and I made an error here. Can you see the white line? I call that my trigger line, and see the arrows, they plot automatically on my chart. I really don't want to take a trade unless I'm trading in the direction of the trade line that's already trending. See how it hugs this? It's just it's basically a triple weighted moving average, and it just smooths out price action like you would not believe. And I've had it coded where I get arrows appear. Now you're not into the next candle, so I should not have entered this trade until over here, and that's the reason I jumped on this one. I was looking down here, distracted. Got to be focused when you trade. Whoops. And so I left my 10 tick stop in place just there. Now what's below me? See down here, I've got major EMA here, I've got a pivot down here, and another major EMA here. Now I know I've got a very good chance of bouncing, and sometimes we bounce right off it. Now down here also I can pick up 3 or 4 ticks net from this particular trade. Now I've already hit my target, by the way, with the prior, what I thought was 4 trades. Actually it's only 3 trades, sorry, because I thought I'd taken a trade at that 2D. And you can just see how well the 2D works out. They're just great reversal trades, but very specific rules. And that's the other thing here. Every one of these setups traders is based on a pattern, and it's rules based. A, B, C. Does it meet this criteria? Now there is 5%, maybe 10% personal discretion in it. You've still got to pull the trigger. Okay, now here I'm targeting this particular level here. Why? Because I know there's a very good chance I could bounce. Now there's also a very good chance we could go straight through it, and now I'm filled there. I picked up, I think it was 4 ticks out of that, around 4 ticks net, and you know what, come down, we had a bit of a bounce in a moment, you'll see, and then it continued. But traders, that's trading. I prefer, once again, a bird in the hand's better than two in the bush. So if we just go back here, okay, so now after that trade, there's a trade potential there. Look at your trigger line hooks, see those? And what I want to point out here, whoops, and I'm just showing you here that all of these, following our rules, these are all setups that you could have taken after. Now there's actually a setup there, but it's a little more complicated, that one, and you had another one just there. Now see the white dots, they're called I call that the T20. The T20 is very good at identifying reversals. Okay, now as you can see, they're at a T20 and it didn't reverse, so we just don't trade a T20 on its own. We wait for a qualified setup afterwards. But if you do get a qualified setup after that, that is where quite often it will turn into a very or you can have quite an extended trade, because it'll help identify a potential reversal. Now let me just close this. So let's just quickly go to the live charts and let's just see what's happened since then. Okay, so if we just go back, so my trading was back here a wee bit, so back, what's that, probably about an hour. Okay, and there was the live trading back there. Okay, so there was the live trading. Now since then, see the our arrows here. Now just down here, see where I've got here, wait for the AC1 trade line. Traders, we actually, technically, you could have said we had a potential entry there, but this is called angulation. Can you see that big angle? That's always a danger area, and you ended up getting what we call a two-legged pullback here. And if you use a MACD-BB, and you know what, I refer to it probably 5% of the time. If I'm unsure if that's against me or this is against me, I won't take it. And we've got a setup, and I just thought I'd put this in because I'm going to show members in our training early next week. This is what we call a bet the farm actual setup. So just partially, I just marked up some of our trades, or potential trades I should say. Now here is a stop out. If we had have taken this one, we just would have been stopped on that. But what we've got is a big reversal just here. When you start to see your EMAs going sideways, and we have, and once again, we'd be looking at a higher time frame as well, that's where then the alarm starts to ring. So what we're looking at regularly is what's happening on what we call our anchor chart. Very simple concept once you understand what we're looking for. See that black line there, and see this is the trade line on a higher time frame with a different setting. And what it does here, if you want to be very trend focused, you only trade in the direction of the trade line. For an example there, you would not take that trade short. You're trading anyway. We're getting a bit beyond the scope of this session, but there's just been a heap of other trades. Now the timing now, it is now 31 minutes past midnight Central Standard Time. So in 90 minutes we've actually got the open of the London session. And so 30 minutes ago we had some of the European markets open, and that's where you start to see a lot of volatility then comes into the market, and we start to see a lot more much bigger waves. Now you may be thinking, okay, I don't want to be up at 1:30 in the morning or 12:30 trading, 1:30 Eastern Standard Time. Well, you don't have to. You can get home from work, as I pointed out earlier, and be trading, or you stay with it, you get up at 5 a.m. and trade, or you trade a higher time frame. Okay, now a higher time frame slows the chart down. Okay, now see how this is moving like this. This is getting on the edge of being too fast. Now at the moment we've seen massive volume for the last couple of days. The non-farm payroll report came out just yesterday. We've seen a lot of volatility in the market, and that's where then I might even look at another market. For an example, the 𝗃 or the 𝗃J, some of the other markets where, by the way, it's only 625 a tick to trade. Now some of this language may be brand new to you, and my job in my program is to train you and get you up to speed on all of this. This is not rocket science, traders. It truly isn't. It's about trading EMA bounces, reversals, utilizing the indicators which do a lot of the heavy lifting for us. Now what you do need to learn though is patience and discipline, of course, and follow the money management rules. So traders, why don't you come and join me in my training sessions where you get, if you can't attend the sessions, some people, of course, some members are based in Europe or other countries where the hours are upside down. So this is US time. The sessions are recorded, and of course I do give you full email support, and I answer a lot of the questions in the coaching sessions that come up, so that way you can watch it, and I usually point it out then on the chart. So traders, come and join me. Thank you traders. See you in the next video, and see you in the members area and in my sessions.